I hope so you all are fine. Welcome to my new video. In this video we will discuss about personal finance. So come to my Google screen and see here. What is personal finance? Personal finance is a term that covers managing your money as well as saving and investing. The term often refers to the entire industry that provides financial services to individuals and householders and advised them about financial and invest opportunities. Personal finance is about provide financial services and individual and household and advise them about financial and investment opportunities. Personal finance is about meeting personal financial goals, whether it's having enough to short term financial needs, planning and retirements, or saving for your child college education. It all depends on your income, expense, living retirements, and individual goals and desire, and coming up with a plan to fulfill those needs within your financial to make the most of your income and saving. It's most to become financial literate so you can distinguish between good and bad advice and make smart decisions. Key takeaway: few schools have courses in how to manage your money, so it is important to learn the basic through free online articles, courses, blogs, and podcasts, or at the library. Smart personal finance involves developing strategies that includes creating and emerging funds, paying off debt, using credit card wisely, saving of treatments, and most. Being disciplined is important, but it also good to know when to break the rules. Of example, young adult who are told in invest 10% to 20% of their income of retirement, you need to take some of those funds to buy a home or pay off debit instant. 10 personal finance strategies. The soon or your start financial planning is better, but it's never too late to create financial goals to give your family financial security and freedom. Here are the best practices and the tips for personal finance. But it's all essential to living within your means and saving enough to meet your long-term goals. The method often a great framework. It breaks down like this: 50% of your take home pay and net income goes toward like essentials such as rent, utilities, groceries, and transport. 30% is allowed to expense such as dining out and shopping for clothes. Giving to charity can go here as well. 20% goes toward the future, paying down debt and saving for retirement and emergencies. It's never been easier or manage money takes to a growing number of personal for smartphone put day to day finance is the plan of your heart. Here are just two examples. Help your tracks and adjust your spending so that you are in control for every dollar that you spend. Minutes streamline cash follower flow, credit card bills, and investment tracking all from one place. It automatically update for categories your financial data and information come in, so you always know where you stand financially. The app will ever dish out customer tips and advices. Create an emergency fund. It's information to pay yourself first to ensure money is set aside the unexpected expense such as medical bills, a big car repair, day to day expenses if you get laid for, and more. 3 to 6 months worth of living experience is the ideal safety net. Financial experts generally recommended putting away 20% of each paycheck every month. Once you are filled up your emergency fund, don't stop. Continue funneling the month 20% toward other financial goals such as retirement funds or a down payment on a home. Limit debit. It sounds simple enough to keep debit from getting out of hand. Don't spend more than you earn. For of course, more people do have to borrow from time to time, and sometimes going into debit can be advantages. For example, it is leads to acquiring a assist. Taking out of mortgage to buy a house might too be such as still listening sometime can be economical than buy outsides when you are renting a property car or even getting a subscription to computer software. Use credit card. Credit card can be major debit traps, but it's unrealized not to own any in the world. Furthermore, they can application behind buying these. There are not critical in establishing your credit rating, but also a great way to track spending, which can be a big add. Credit just need to be managed correctly, which means that you should pay off your full balance every month or at least keep your credit utilized ratio at a minimum. That is, keep your account balance below 30% of your total available credit. Given the extraordinary reward often these days, such as cashback, it makes sense to charge as many purchase as possible if you can pay your bill in full. Most important, avoid maxing out credit card at all cost and always pay bill on time. One of the fastest way to run your credit score is the consistently pay bill late on our mispayment. Using a debit card which take money directly from your bank accounts in another way to ensure that you will not be paying and small purchases over an extended period which interested. Monitor your credit score. Credit cards are the main wheels through which your credit score is built and maintained. Also, watching credit spending goes hand in hand with monitoring your credit score. If you ever want to obtain a lease, mortgage, or any other types of financing, you will be need a solid credit report. There are a variety of credit sources available, but in most popular as the fact to determine your FIQ resource includes payment history, awesome of credit history, credit mix, new credit. If you like our video, please subscribe our channel. Thank you so much. Goodbye.